The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, let's take a look at the market trade action after Thursday's session. It's been an interesting week across the grains and oil seeds. We saw soy rebound a little bit Thursday after a pretty sharp sell-off Wednesday. Corn market just continuing to kind of chop around. Wheat under a little pressure. Maybe still some fallout from last week's December WASDE report with some demand changes, particularly on the corn side. Let's talk about this. Joining us here on Market Talk, pleased to welcome him into the program with us here for the first time, David Brock from the Brock Report. David, it is good to catch up with you. Thanks for joining us here. Hope you're doing well.
Yeah, doing great. Good to be here, Jesse.
Well, let's dive in, and you got some charts and whatnot to help illustrate here a little bit on the video feed. But as I kind of mentioned, maybe still some fallout in these grain markets from the WASDE report last week with some surprising moves on the corn side for the month of December. So, I mean, you take stock of this whole grain complex here as we near the end of this week. What's standing out to you when you look at the grains right now, David?
Well, it was really, really good to see the USDA make a huge increase in corn usage, right? I mean, you got to remember a couple months ago, maybe even less than that, USDA had ending stocks to use at about 15%. We're now down under 12%. And I mean, to get a major bull market, you really need to get down under 10. But I mean, the bottom line is, you always hear low prices are the cure for low prices. And so we've seen demand pick up. It wasn't completely shocking to see those changes hit the balance sheet. It was a little surprising to see that much in December. And I mean, the big increase was corn exports at 150 million bushels and ethanol usage at 50 million bushels. So I think that's what everybody's attention has been on and probably will continue to be on during the kind of slow winter months here.
Absolutely. Well, and I think too, you look at just the soy complex to kind of rope that into the conversation. A lot of folks concerned there, and you look at the corn being spread and, the ratio, thinking about the acre mix for next year, et cetera. And so I just, I wonder, does this make the case for a bull market in corn? All of these things kind of lining up. What do you think?
Yeah, it's tough to say. I mean, right now the thing is demand. Acreage will definitely be a discussion as we get into kind of like February, March timeframe. The soybean price action the last 3 days has been very poor. You can make a case for much lower soybean prices, as many people have been for the last several months. I think you got to expect to see a decent acreage shift to corn this coming year, just given how much it dropped last year. And so that's not going to help the bull case in corn, but if demand is strong, if corn export commitments stay at this pace and we're able to export it, you can definitely make the case for a little bit of a bull run here in corn. I mean, I'm not expecting $5 corn. And frankly, I don't know if we can expect exports to continue as long as they have. I mean, a lot of the question has been, are people front loading for tariffs, et cetera? It's hard to rule that out. So I think I'm sharing my screen here. Can you see this?
Yes. Yep.
Yeah. So, I mean, just kind of the big picture right here first for corn exports, we're 320 million bushels or almost 30% ahead of last year's pace, and about the same versus the 5-year average. Now, that's kind of been built into the balance sheet now with this increase here. As you can see the USDA target up here and where we finished the last couple of years. So to help answer the question of are we front loading, let's take a look at where corn exports are going. So it's kind of a maybe, maybe not. This is probably one of my favorite export graphs. It gives a little bit more detail. So on the left side here, we've got our current year exports and then the past 2 years. So the dark blue here is our shipments, i.e. how much have we actually exported? And the light blue is commitments, right? So we've sold it, haven't shipped it, could get canceled. All right, so if we're really worried about front loading exports, the first place you got to look is Mexico. Mexico accelerated their buying to get ahead of any potential tariffs? Well, maybe. I mean, they're up basically 40 million bushels over last year. Nothing crazy. You look at China, they're not front loading anything. They've purchased 1 million bushels of corn from us this year, so next to nothing. So where is the increase coming from? It's unknown and rest of world. So, I don't like seeing unknown be this much right, of our exports. So we don't know if that's China. We don't know what it is. If it was China, you feel like the rumor mill would be buzzing about that. We probably have some indication. But to see the rest of the world exports this strong and to see where it's going. So number one, you can see here, this is the last 2 years and this year exports to unknown. I mean, we're up 176 million bushels versus last year. So that's unknown. But look at all of these other areas that are buying more than last year. I mean, Korea, Guatemala, Honduras, Panama, Spain. I mean, the idea that they're front loading tariffs, that obviously is not the case. So to some extent could be happening. I don't think that's a huge part of it.
Sure. What about beyond the export side? What about, ethanol demand, crush demand? I mean, we look at that side of the equation. Is there anything there standing out to us, David?
Yeah, there is. So USDA increased by 50 million bushels, which is less than 1%. I mean, it's not a huge increase. Well, however, year to date, we're up 108 million bushels versus the 5-year average. Okay. We're 60 million bushels ahead of last year. So if we were to remain at this level ahead of last year, and we'd be looking at a 5.7 million bushel crush. Now that's not going to happen. That compares to the 5.5 billion bushel crush. So we're off in the right direction. Any increase there in ethanol, and I think I've got this here too. Here's our weekly ethanol production. Any increase there is basically straight to the bottom line. Unlike in soybeans, right? You compare this year's soybean crush to last year's, you're like, great, we're way ahead of it. Well, USDA is projecting 115 million bushel increase. So we've got to be way ahead of last year just to keep pace with what's currently on the balance sheet. So I think it's very possible that we see a further increase in ethanol usage. I think it's likely we see another increase in corn export, but we're not going to see that in soybeans, despite how good those numbers look.
Sure. How does a high dollar impact all of this too? I mean, you see the dollar this week, Thursday's trade getting up around that 108 level. We had the Fed meeting, of course, with the interest rate cuts, et cetera. I mean, how's that high dollar impacting things in your opinion?
Yeah, I mean, it's not good for exports. I mean, particularly when we look at soybeans, right? Our number one competitor is Brazil. And so, the dollar to the real there is very important. And you got to look at that more so. You got to look at the real almost more so than you do the dollar index, right? Because they're not part of that. So, so it's not a positive for soybeans. I mean, our exports there have been okay, not remarkable, but better than last year, a little worse than 5-year average. So, soybean balance sheet just kind of is what it is. And that's what the USDA told us last week also.
Yeah, absolutely. What about looking ahead to the January WASDE too? Because that's going to be on top of us here before we know it. And that's traditionally a very volatile report, big report, a lot of numbers, plenty of changes usually. So, I mean, what do producers need to keep in mind risk management wise, do you think, between now and then?
I'm not sure. I'm still kind of digesting the December. I haven't put too much thought into the January report yet. I mean, obviously, we're going to be curious to see if they change corn demand again. But I mean, from a risk management standpoint, I think you just got to uncomplicate things. The world supply situation in soybeans is, tremendously full. And so I think any rallies in the soybean market need to be sold. Hopefully we have those. And for corn, I mean, we're well off the lows. As the balance sheet continues to evolve, you got to ask yourself, can we really get under 10% stocks to use? And if not, I mean, we're kind of priced where we need to, where corn should be priced. I don't think holding out for, rallies to the $4.75, $5 area is a reasonable thing to do. As far as how that impacts your marketing, I mean, that obviously depends on, storage, whether you're paying for it, it's on farm, when you deliver all that stuff.
Absolutely. Well, and of course, as we always remember, the risk of trading futures and options can be substantial, and you always got to take a look at your own specific set of books and balance sheets to figure out your risk management plans. I should ask too, David, some of the other markets, wheat, cotton, rice, et cetera. I mean, there's some of the same dynamics, I guess I should say, in many of these markets too. You think high dollar export impacts, et cetera. There's obviously a lot of things to watch there too, isn't there?
Yeah, I think the dollar is hurting wheat right now. I mean, the global balance sheet on wheat is relatively tight. It's been contracting, I want to say like 5, 6, maybe 7 years straight now. So, I'm pretty friendly on wheat. Today's price action does not help that case. But yeah, friendly wheat. Cotton demand has been bad forever. Everybody knows that. It's built into the balance sheet. Our export projection is extremely low, right? Looks like we're on pace to exceed that. So, demand across the board has been strong. So again, you got low prices, securing low prices, helping demand out. When it comes to marketing, this is just not a time of year to be doing anything major. If you feel undersold on corn, particularly a good time to get caught up. Beans you got to be cautious of. I'd sit tight on wheat, cotton, rice. Plenty of time left there.
Well, appreciate the time. Good stuff. And I know folks, if they want to reach out, take a look at analysis and much more, brockreport.com is a great place to start, isn't it, David?
Yep, that's it.
brockreport.com for more. David Brock, good to talk with you. Thanks for joining us. Merry Christmas, Happy New Year to you, and we'll talk to you real soon.
Merry Christmas. Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.